Where's the window?
So what do these economic moves and projects translate to? My takeaway, Bendigo's economy is built on stable foundations, anchored by jobs, infrastructure, education, and innovation. But success still hinges on knowing where to buy. Job diversity, tenant stability, with a private sector, the public sector, health, education sector from primary, secondary to university are all thriving rental demand and owner-occupier demand. Let's look at GovHub, an urban building boosting workers into the CBD, meaning more lunches, more cafes, and more housing demand nearby, or equally just a commute into Melbourne. Industrial precincts for long-term growth. More industry means more workers and infrastructure, the kind of fundamentals that underpin capital gains together with demand and supply dynamics. Innovation hub, what does that look like? You're looking at quality renters, mid-skilled professionals, typically seeking your long-term quality accommodation near the education and services precinct. Together, these projects anchor Bendigo as a regional hub, not just surviving off history, but future-proofing its growth. So Bendigo's infrastructure pipeline is strong, it's diverse, and strategically placed. But here's a catch, it doesn't fit all suburbs equally, because knowing the macro is great, the property investment always comes down to the micro granular level. Now, let's be honest, not every Bendigo suburb is a gold mine. In fact, if you're buying in some of the wrong pockets, the wrong streets, you might be sitting on patented gold that never shines as much as you want to polish it. We're leaving the big picture economy. We're diving into the suburbs that investors, like myself, should keep a little bit of a closer eye on, and the ones to be a lot more cautious about. Golden Square is Bendigo's inner ring powerhouse. Your median price point sits just over that $500,000 with strong growth of more than 50% over the past 5 years. It's walkable, close to the CBD, and attracts a mix of young professional, downsizers, and investors. Your vacancy rates are tight. Rental yields hover around at 4.8 to 5%. Your heritage homes and renovation opportunities make it a prime manufacturing equity play. Kangaroo Flat is Bendigo's family-friendly workhorse. Bigger blocks, more green space, and a train station linked to Melbourne. Your rents are pushing up into the high fours a week. Yields are at 4.9%. Family renters bring in the longer leases and the less turnover. Your strong appeal for owner-occupiers, which drives long-term stability. Strathdale and Kennington, these are Bendigo's prestigious suburbs. Your higher income families, good school, and a strong owner-occupier demand. Prices here are above the city's median, but so is its resilience. There's low vacancy, stable capital growth, underpinned by schools and lifestyle appeal. It's great for investors targeting more so of a blue chip regional stock. Huntley, Epsom, your growth ring corridors. These are outer ring areas that are still affordable with new estates coming online. Population growth is funneling families here, chasing house land packages. Your yields can be a little bit softer if the oversupply hits, but infrastructure growth is still supporting that long-term demand from the first-time home owners. We're at a good entry point for first-time investors if you can buy selectively, but of course there's absolutely better options. Oh. See you on the next one. Your riskier plays, being on the fringe of the CBD in certain pockets of Bendigo. While Bendigo CBD benefits from the GovHub, not every fringe street carries the same appeal. Some areas suffer from higher crime rates and the older stock with lower rental appeal. It can be great if you're targeting the higher commercial conversions of the higher yield sharing houses. But let's face it, it's riskier for standard family bread and butter investments, as tenant churn can be a little bit higher. Let's unpack Eaglehawk. Eaglehawk has heritage and character, but also higher vacancy fluctuations compared to the city average. Your prices can be attractive, but you need to be selective street by street, pockets by pockets. Crime perception. Your issues in some parts can weigh on growth. The outer new housing estates in pockets like Huntley, Maiden Gully can be tempting. Shiny homes, affordable entry points, but let's face it, oversupply risk is absolutely real if the approval starts ramping up again. Stick to the estates with the infrastructure backing with school, retail, transport. Avoid the house and land packages in the oversaturated pockets. So how do you separate the winners from the risky bets? You're looking for job proximity, close to hospitals, Bendigo GovHub, schools, or transport hubs. Let's target the lower vacancy pockets where higher demand suburbs with proven real rental depth and demand. You want to avoid areas where supply is growing too fast and demand is slow, because that's where the yields will flatten and prices stagnate. Is Bendigo's property market a smart play for the next decade, or is it simply overpriced hype that's already running its course? Your median house price is sitting around the 580k mark. Bendigo is no longer the cheap, dirty regional buy it was once. That's up more than 50% in the past years, but prices have softened slightly after 2022, and we all know why. The rental market median rent is sitting around anywhere from 420 to 480 a week, depending on suburb and house appeal. Your gross yield is 3.5% for houses and slightly higher for units. Vacancy rate is 1.5 to 2%, balanced but not as tight as the likes of Ballarat. We're looking at building approvals having peaked in between 2019 in 2021, but since COVID, that has now slowed down. That means you've got less new stock hitting the market, which could tip that demand back in favour of landlords over the next couple of years. Affordability in Bendigo is still cheaper than that in Melbourne from a price point, but it's edging closer towards the outer metro prices. For local incomes of around that 1,450-ish per week at a household level, affordability is somewhat, let's be honest, being stretched out, which could slowly start capping that short-term price growth. On the other flip side, the risk to watch with affordability seeding is whilst prices are rising fast, Bendigo has a potential risk to being priced out from the locals due to the affordability index. Let's unpack that oversupply in the upcoming estates of the Huntley, Maiden Gully and the newer fringe estates could equally underperform if the approvals are then ramping back up in the next couple of years. Whilst we've got the other patchier suburbs, the CBD, fringe and Eaglehawk often need to have a little bit more due diligence when it comes to price with a bit more tenant churn due to the business of Eaglehawk Road. That's Bendigo, unfiltered, a city with strong bones, cultural heartbeat and growth on the horizon, but not without its underlying risk. Bendigo is not a boom and bust town. It's a slow burn, fundamentals driven market. You won't get 20% growth overnight, but what you'll get, in my opinion, is solid long-term capital gains. Consistent rental demand from that healthcare, educational sector, multiple entry strategies at renovation, potentially subdivision, your buy and hold asset types. But the key is suburb selection. We've gone through Golden Square, Kangaroo Flat, Strathdale, and the inner pocket near jobs and infrastructures are always winners. Oversupplied estates like Huntley are risk fringe suburbs. Tread carefully or simply avoid at this point in time. So, is Bendigo worth it? For investors who understand the fundamentals, it's a simple yes for me. For speculators chasing quick wins, it's probably gold-plated gold. That's a wrap on the Worth It series, Unpacking Bendigo. If you found this series helpful, hit that like button. Drop a comment on which suburb you invest in, and please do not forget to subscribe. So if you're the next investor looking to unlock equity here, why not come with me in the car Let's go. Let's get tailgated along the Midland Highway. Until next time, stay smart, invest with insight, drive safe, and I'll see you on the next episode while I find your next equity play. I'll catch you on the next one.